Well, while we are waiting for our foreign colleagues to get connected, let us open our discussion with whom we have here in the audience, in the hall today. We thought Debelle would be opening.
Guy, do you hear me?
Yes, I do think
so.
Sergey.
Great. Sorry, so we are a little bit late with our first panel. Sorry for this delay, and we are very happy to see you here in Moscow. The hall is, of course, half empty, but a lot of participants are online. Unfortunately, the pandemic trend in Moscow is a little bit scaring, and so we have more the studio for virtual event than real offline event, as we usually have for GFXC summit in Moscow. On this stage also you can see probably we'll see Dmitry Piskulov and from Moscow Exchange and Valery Lyakh from Central Bank of Russia. And first I would like to ask you, Guy, to start this panel with your message as a chairman of Global Foreign Exchange Committee, which Russia joined last year. It's proud to be part of this membership, and so this is your turn probably to start the panel and tell our auditorium how actually this work is done and what are actual problems, what is the main focus of global foreign exchange, and how it will help to provide integrity on the fixed market with self-regulation, or you think probably that on the national levels there should be some regulation of a fixed market or even global. So please, now it's your turn to start. Thank you.
Okay, thanks very much, Sergey. I apologize that the sun has just decided to set in my face as I'm starting to talk here. But I'm very, very pleased to have the opportunity to speak to you all in Moscow virtually. Sergey has kindly asked me to come to Moscow in person a few times, and I haven't yet, unfortunately, been able to make it because it is a place I'd very much like to visit. But as Sergey says, I'm the chairman of the Global Foreign Exchange Committee, have been so for the last year or so, but prior to that, I led the group which actually set up the Global FX Code for 2 or 3 years. So very much was involved in putting the FX Global Code into place 3 years ago, a bit over 3 years ago now. So let me just talk to you a little bit about the Global Foreign Exchange Committee, GFXC. So it's a mix of both public sector and private sector. There's half and half on the GFXC. We have 20 member countries or 20 member foreign exchange committees from around the world, including obviously the Russian one. But we have a mix of sort of G10 currencies, but we have also a bunch of emerging currencies as well, including the RMB, India, Brazil, Korea. It's a wide range of countries from right across South Africa. So a wide range of countries from right across the world. Each committee is represented on the GFXC by a central bank representative and by a representative from the private sector in terms of the FX market. And within the private sector representation, we have a broad representation from the sell side, the buy side, platforms, some non-bank, major non-bank players as well. So we try and ensure that the whole breadth of the market is covered by the GFXC. We've met 3 times already this year, each meeting virtually. And each meeting we discussed what's going on in the foreign exchange market in terms of market functioning, compare notes and experience. One issue which we've talked about a number of times, which may be relevant to you all, is that we've had quite a few discussions around benchmark fixes. which has been a long-standing focus of the committee since its inception and going back even before that. I was actually the GFXC engages with WM Refinitiv these days, WM Reuters, which runs the London 4 p.m. fix as well as all the other FX fixes. I was on a call with them last night, actually, about this time last night, this time yesterday, your time. And we are talking to them about some of the concerns that some of the market participants have had with benchmark fixes and ensuring that WM is aware of them and encouraging them to be much more engaging with the market participants. And I was reasonably encouraged by what they said last night, that they are going to increase their profile, engage more with market participants, potentially provide more data around the fixes to market participants as well. So, you know, that's, I think, something which would hopefully be a more positive development going forward. That said, one thing I would encourage you all when you're thinking about using fixes is that you're using them for the right purpose and that you understand why you're using them and how your orders are being handled around the fix, and particularly around month and quarter end, and just be aware of the risks, potential risks and volatility that can occur around that. So that's one of the topics we've been picking up in terms of market function over the last while. Let me talk a bit about the FX code. It's been in place, as I said, for a bit over 3 years. We have over 1,000 people who have signed the statement of commitment to the FX code, including some participants in the Russian FX market. And I do think it has had an impact in improving market function, particularly compared to where we were prior to the code. And one of the main aims we've been trying to do with the code is to have one code across the whole FX market. So as you may be aware, there was the ACI model code, which a lot of which is reflected in the FX global code. But there are a number of different codes of conduct used by different markets. The ACI code was used in Russia, it was used in the Australian market, but it wasn't used in places like New York or London, where they had their own codes, or none at all in the case of New York, really. And so there really was a desire to have one code to reflect the fact that there's one global foreign exchange market, and that's what we have. It's a code of 55 principles. It's principles based. It isn't regulation. We aren't regulators. I'm a central bank, but at least in Australia, I'm not a regulator. I'm a market participant. The Reserve Bank of Australia is a reasonably large market participant in the Australian foreign exchange market, but we aren't a regulator of the market. And so the code is a principles-based code. I think it is pretty straightforward to read. It isn't black letter regulation, and I think that is appropriate for the foreign exchange market because there's a lot of grey in the foreign exchange market, which doesn't suit well to black letter regulation. And at least my experience is the more you try and get prescriptive around the FX market, the less successful you are. So hence the fact that the code is principles based. That said, in a few jurisdictions like mine, like Australia, the securities regulator here uses the FX global code in its surveillance of market participants, and a similar situation occurs in London with the FCA there. So the code, as I said, is principles based. We put it together launched it 3 years ago, a bit over 3 years ago now, and we said that we would update the code every 3 years to ensure that it remains consistent with the evolution in the FX market, and that's what the process we're in the middle of now. So I'll just talk a bit about that, and then Russ and Dmitry, I think, will pick up some of the other points as they're involved in some of the groups which are looking at various aspects of the code. So we're reviewing the code, but we're not going to change it substantially. So it's going to, the feedback we got from market participants is that it remains fit for purpose. It's working in the market. Most people are comfortable with the bulk of it. There are a few areas where we need to keep moving ahead as the market is moving ahead. around anonymous trading and around some issues around some of the platforms. And there are some areas where we don't think market practice is as good as it could be, and disclosures. So the disclosure documents that mostly banks put out, not all of them we think hit the mark, and we do think there is room for improvement there. And so that's one of the other issues we're looking at. And then the other area we're looking at, which Russ will probably pick up on a bit, is around some of the trading practices which have been always contentious in the market, remain so. So most notably pre-hedging and last look. You know, that we didn't necessarily land them exactly right the first time. I think we did a reasonable job, but that's somewhere where there continues to be a lot of discussion, and so we are looking at them again. I don't think we're going to change them particularly, but it is an area of focus. And the final area I'll talk about before turning to the next speaker, an area we've talked a fair bit about is settlement risk. It's been an issue most obviously in Turkey and Argentina in recent times, and that is an area where we think we can, bring it to people's attention. There is the BIS triennial data on FX market turnover says that looks like there is a lot more FX transactions which don't go through PVP settlement processes, and as a result there may be substantial FX settlement risk out there. So we are highlighting that issue, reminding people that settlement risk is a thing, and it's something you need to be aware of. It can obviously entail a pretty large risk if it isn't handled appropriately. And so that is one thing we are doing, is reminding people of it and looking at the way we cover that in the code and seeing if there's some areas there which we can tighten up as well. So they're the areas of focus. They're around trading, settlement risk, anonymous trading, and they're the disclosures, and algo execution, which is obviously something which is a lot more prevalent today. So they're the areas of focus. The code isn't going to change substantially. If you haven't signed it, or if you haven't had a look at it, I would encourage you to do so. It is fairly easy to get your head around, I think. It's not that hard, it's not that long. And I would focus on the areas which are most relevant to the way you engage with the FX market. And I would strongly encourage you, if you haven't already, to think about signing up to the encode so that we can ensure we have a well-functioning FX market right across the globe. So, Sergey, let me finish there and hand over to the next speaker.
Thank you, Guy. And actually, I have one question for you from our auditorium.
Sure.
But before I will ask you, please, can we show our poll today in our online platform? We can ask people so about the different topics, and for this panel, so I would like to ask you, do you think that participants on a fixed market should regulate themselves through voluntary adherence to the principles of a fixed global code, or would you consider FX as a financial instrument which needs strict authorities regulation? And so people will be answering to these questions, and I will change a little bit this question and address to Guy, if possible. So please, could you also show the Zoom screen, and we will come back to the results of this poll at the end of the session. So, Guy, what is your opinion as a chair of Global FX Committee to the ESMA consultation paper on provisions of market abuse regulation? That's quite a hot topic, because inclusion FX as a financial instrument to MiFID II will lead to big changes on the market and a big burden to all the participants. And ACI prepared, the answer to consultation paper. Probably you have seen it. So, what is your opinion? And do you think that probably Global FX Committee could react somehow to express its opinion as a committee of central banks, and which could be probably more heard by the regulators than just market participants' voice. What do you think?
Yeah, so on that, so I have been in direct engagement with ESMA as the chair of the committee earlier in the year, and I'm going to be speaking to them again in a couple of weeks' time on exactly this issue. Slightly difficult for us to speak as a committee because we've got the ECB and whatever on the committee, which makes it a little more challenging. But I, as I am speaking to them as chair of the committee, and I suppose my view, there are two things, or a couple of points I made to them. One, they've got to be mindful of the fact that the foreign exchange market is a global market, and trying to regulate it in a local jurisdiction, I think, is challenging because of the huge breadth of market players from right around the globe who are going to be trading with people in the Eurozone. So I think that I'm not sure that's they fully appreciate the consequences of that, or maybe they appreciate, but I'm not sure they realise just how challenging that potentially could be. The second point, which is alluding to what I said earlier, is I don't think the FX market is particularly well suited to black letter regulation. The way it's approached in Australia is that the market participants are regulated in terms of being market participants, and regardless of whether that's the FX market or any other market. And so if you do something wrong, you have your license is potentially at risk, but it's not black letter regulation of the FX market per se. So I do think that doesn't really work, because I think it would be almost impossible to come up with regulation which actually worked. And hence that's why we have the principles-based approach in the code, and that's why regulators like ASIC here in Australia, our securities regulator, and the FCA in the UK reference the code in the way they assess market participants' market conduct, but they don't try and go for sort of black letter regulation. So I don't think that's the right solution. You need to be, the market participants need to be held to account if they're doing the wrong thing, but I don't think it's via black letter regulation. I think it's more around, if you're not following the principles in the code, then what our securities regulator does here is, or has a capacity to suspend your financial services license, which is a reasonably hard penalty. But that sort of approach, I think, is going to be more workable than trying to come up with a regulation for a market which is global in nature.
Thank you, Guy. And I would like to switch to our panelists here in Lotte Hotel. Valery,
you've been head of director of the Bank of Russia Department for Countering Misconduct. How do you look at the regulation of the market? Are you satisfied with the current situation on FX markets, or what are the tools you'd like to implement? And do we anticipate any threats of initiatives like those in Europe concerning the regulation of FX market? What do you think about that? And how does the approach by Global FX Committee based on principles be applied in Russia? Thank you very much for your question, dear colleagues, offline, online. Good morning to you. Thank you, Sergey, for organizing this event. To see people offline in our days can be appreciated. I'd like to give a disclaimer. I couldn't miss this event. Now we have so-called the week of silence. Everything I'm going to say is not going to be within the purview of the Central Bank of Russia. As for your question, I'd like to mention that As from my perspective, non-compliance of market participants with the code or with the code of conduct on the FX is kind of to be a benchmark for the participants. The compliance with this code should give such advantages as not the following the rules by the letter can give. So the principles are more important rather than the formal compliance with the rules. And the second point we should like to mention, considering the market cross-border nature right now and its shift to its cross-border nature, compliance with the code, the understanding of the code, gives us the opportunity to interact, and the market participants can interact with each other with different mentality. So we should understand that we have foreign players on our market, our players are present on the foreign markets, and the conduct is governed not by the formal procedures, by those mentalities, mindsets which are in place, and the codes are a mechanism which allow them to understand the rules of the games on the market which they haven't been present for a long time.
And actually, it sets the framework that would also put your mind into the right framework so that you don't go beyond those boundaries that exist. Regarding regulation and your question about regulation, we are quite cautious about our regulation techniques, and Dmitry probably comments on that more, but it is more about the stock market and the stock market instruments. Igor probably also shared with you that we will be looking also at some other forms of trading to more or less limit the aggressiveness of such trading, but this is what we are looking at right now in terms of regulation. Maybe a couple of words about the regulation generally. We have the MOEX code, but what about this more or less umbrella framework of the common code, how it prevails in the market? Our principles is the more or less the top-tier good conduct code that we discussed with the various market players, and we also discussed this at the market board. The idea behind this top-tier code is that basically it would be brought down to the industry level and sector level, and this would be the general code, and our system is more like a pyramid. The top tier good conduct code, which is common for all the industries and sectors of the financial sector. Then you have the industrial codes and the occupational codes. So three tiers. Together with CFA of Russia and we prepared an instrument which is more or less like an ethics code for financial analysts, and NFA is slowly but surely implementing this code, and some of the acute issues may be regulated through principles that are reflected in that code. Those would be done with soon, and if you have any cases that you need to look at, they would be more or less discussed publicly, and all parties concerned will be able to understand those and understand the principles behind decision-making and how those decisions are made. You may agree with those decisions or not, but at least you would understand the principles. Thank you. Dmitry, will you continue about what is going on in Moscow Exchange? This is the only participant of the FX market which actually signed the statements on the adherence to the global FX code. Of course, we are working towards having more signatories to be on board, and in August we had a discussion with the banks, and Valery discussed that in more detail. And of course, we are waiting for some action on the part of the central bank to lead the example, more or less, to confirm that general tendency. So, Dmitry, you are representing here the Moscow Exchange, but you are also a very active member of the working groups that consist of market players and work in line with the global committee. What is actually very important for you in terms of your capacity in the Moscow Exchange and the global committee?
So yes, answering the first question, indeed, the Moscow Exchange was the first Russian financial institution, an exchange, an electronic platform that issued a statement of commitment to the FX Global Code, yet in July 2018, so more than 2 years ago, because, as it was said before, we are considered by market participants, both local but mostly important by international participants who trade at Moscow Exchange, and we have about 45% of international turnover on our spot market comes from international participants. So they quite eager to see that major Russian dominant ruble liquidity pool, which is benchmark for ruble trading, and its prices in its order books is a benchmarks, has adhered to the global code. So we issued the statement of a commitment. I would not say that we very thoroughly scrutinized our activities, but we have a strict regulation from the central bank. Also, we have very profound rules, rule book, and a lot of procedures. So we adhered to the code, saying that we are compliant to it, and we published it on our website. Since then, we expect that more institutions should come to issue the statement of commitment in the Russian market. First of all, we expect that the Central Bank of Russia would do it, and also being a part of ACI Russia local community, which promotes the FX Global Code and its principles, also via education. We're going to have some educational courses to the central bank, to relevant personnel of the central bank, for them to evaluate and understand and correctly understand how to apply the leading principles and the principles of the FX Global Code. So we hope that we will not be the only institution in the Russian market, and the start will go on in adherence. We also expect that large Russian banks will also join the FX Global Code. So this is about the code, which is a cornerstone, and we expect that the use of best practices, these high-level best practices, which are written in the FX Global Code, will be implemented, will be used and employed by local participants. So actually, yes, I would like also to comment on the question of Sergey, that I myself participate in one of the working group of the Global FX Committee. This is the working group on anonymous trading. Why is it? Because actually Moscow Exchange used to be an anonymous trading platform for many, many years. Since we use the central counterparty, the National Clearing Center, as a counterparty for all end buyers and sellers, so they do not know the names of each other. All trades done via CCP. And in the classification which is made by GFXC, we see that there are fully disclosed mode of transacting when the counterparties know each other before the trade, to the fully anonymous, for instance, like in our case. And in between there are semi-disclosed and semi-anonymous. And we also understand that these trends that exist in the international market, we are also moving to new principles, to new products in our product line of Moscow Exchange. So, for instance, last year we introduced launched new product which is called Request for Stream. It's RFS, we call it RFS shortly, which actually makes use the tags. And one of the most important question which is being analyzed and being discussed by the anonymous working group is the information sharing and the use of confidential information in the use of tags, in the tag management. And when we use tags, of course, it is a challenge to us because the tags makes us already as semi-anonymous. And in this process, the liquidity consumers, the takers, the tags of which we use, we should disclose them very carefully, and they should understand that we need to respect their identity and anonymity. They expect us to have the anonymity, and that is very in line with the principles 19, which says that market participants should clearly and effectively identify and appropriately limit access to confidential information. So they want a confidentiality, and that poses to us a question to what extent it should be reflected in our rule book, in our procedures. Because this is important for the, as I said, for liquidity consumers, and as well as to actually market makers, liquidity providers. So when they assess their market impact. There are a few other streams in this work of anonymous working group. One is this is quite close to disclosure and information sharing. For instance, the use of post-trade data, which is very important for both for the venue to analyze the behaviors of its market participants, its players. It's very important to liquidity providers for them to optimize the pricing they provide to liquidity consumers to make it efficient, and especially for liquidity consumers, which needs the post-trade data to optimize the liquidity they receive from liquidity providers, and to benchmark the performance of liquidity providers to reach the best execution. So especially this is important with the development of artificial intelligence and machine learning, the topic that will be discussed later during this conference, because this proliferation of modern technology makes the ability of liquidity providers to swallow, to digest the data, the information they receive from venues in a way that it should not be harmful and shouldn't be in a disadvantage to liquidity consumers. For instance, in such areas such as fill ratios and reject rates and shut off from the liquidity. So we feel that all these items are quite important. Another issue is being discussed is cross-venue credit checks. It's quite a new thing. We know that many market participants, they allocate their limits on the venues on each client through trading through each venue on a gross basis, so they allocate it on each client on each venue. This is especially important in view of that some clients work through the FX prime brokers. So actually there is a need to use a specific technology, IT solutions that can make it the utilization, can monitor the utilization of the limit per client, per trading venues in a more efficient way. So this is important from risk management point of view, because the current situation leads to first excessive use of the limit, and secondly to over collateralization. And that is why this is important, because the modern IT solutions provided by some vendors may solve these problems. This is so actually this is only anonymous trading working group of GFXC, which is producing its materials to the benefit of to improve and to raise important questions in the further development and improvement of the FX global code. And we appreciate very much the other streams which are done by the GFXC, such as by-site outreach, the disclosures, the execution, and some others.
Thank you, Dmitry.
Okay.
Yeah, the time is clicking, and I think you was already full. In your describing your work, I would just add that Dmitry is also a member of Moscow FX Joint Standing Committee, where we discuss those issues and do the homework before the Global Foreign Exchange Committee meetings. Now it's time to ask Russell. And I would like to ask you, how did adherence to a fixed global code help to Deutsche Bank to serve clients and probably to get market share or not? What is your experience as a global FX provider?
Thank you, Sergey. Can you hear me okay?
Yeah, and we see you and hear fine.
Yeah, thanks so much for inviting me to speak today. These events are always easier and actually a lot more enjoyable in person, but bringing together the foreign exchange marketplace on Zoom is also pretty cool. I'm honored to be invited to speak on this central bank panel. Deutsche Bank and the Central Bank of Russia have a very long history together, and the Russian market is one of the biggest in Europe. So this is important, and thank you for organizing it. Let me just begin, before I answer your question, with a few words about the Code of Conduct. As Dmitry mentioned, being a part of these working groups is very critical, I think. And when you represent FX committees around various regions, you're always trying to bring together the best outcome, really, for all the market participants. The regional aspect, as you mentioned earlier, on the FXC is extremely valuable when considering the execution best practices of FX globally. And as Guy mentioned, the GFXC has been very flexible to allow for regional considerations within the FX global code, while maintaining also the integrity of a principle-based code, which I think gets to your comment earlier about regulation and rules-based. Getting this high-level document correct without being too high-level is really the art of what we're all trying to achieve here on the global code. And what would not work, in my opinion, for this industry is explicit rules-based code that tries to cover each region's nuances. The global code is mostly not regulation, as Guy mentioned, but best practices. But I think it's important to understand the code does apply to all. It's intended for all market participants, whether they're corporates or banks or hedge funds, high-frequency trading firms, and recognizing that while the code applies to all the details and precisely how we have differences, I think it's really important we've come together as an industry to get this feedback so that we can have a proper review. And so here we are 3 years later, post the code launch, doing this review to see if we do need any enhancements to the code. Like Dmitry, I'm also on the working group for reviewing 3 areas within the code: last look, pre-hedging, and riskless principle or agency type of execution. Let me give you an update on where we are on these working groups. Last look, this group is focusing on drafting a paper which will clarify the mechanisms of last look. This paper hopefully can be utilized also as an educational resource among market participants. Disclosures are very critical for us bringing up the code on each review process. And I think the details around disclosure will be an important part of this process. I could almost imagine us coming up with standardized templates that are very easy to understand and that give disclosures around the mechanisms of each liquidity provider's last look details. Secondly is pre-hedging. This is a tricky one, but I'm very proud that the code tackled this in the beginning 3 years ago, and that we have a basis to form pre-hedging best practices. There has been a lot of input from both the sell side and the buy side here, and the focus is going to be on clarifying pre-hedging. Some of the areas we're discussing now is what pre-hedging is. Specifically, what's the difference between hedging and pre-hedging? Is this a function of risk transfer between the client and dealer, or is it a function of a trade information, specific or non-specific, or both? I think it also, another very important part, does pre-hedging apply to electronic dealing and voice dealing? I think it's very difficult to separate those two, but we'll see where the committee lands in this. And what is meant by an anticipated order? This is a fundamental question that defines the scope of the transactions the principle applies to. Can we assess and monitor the effectiveness of this, specifically pointing out what is disadvantaging the client or advantaging, and potential conflicts of interest, of course? How can better disclosure and communication help? Again, this is coming down to where I think we're going to land is much more disclosure. What is meant by pre-hedging, and consider pre-hedging within a whole portfolio of an order book? This is critical, I think, to combine this into the results of ours. GFXC is going to need to provide clarity on these issues to be successful. So also including in pre-hedging, I think the mechanics of an FX trade within the potential conflicts, this also needs to be addressed. So we're not sure where we'll land, but we're trying to come up with the answers to these questions, and maybe the result is we will have an educational paper coming out around the FX markets. I mentioned disclosure earlier. This is also a very key working group. It's a key topic for our 3-year review, especially when applied to all the execution pieces. Market participants should both have the right tools to make the right choices, clear and easy to understand disclosures. I think giving clients the ability to make informed choices is the best result for the FXC. So lastly, just in summary of what we're doing on the working group, we're also talking quite a bit about netting and settlements, as this is a key to the safety of the overall market. So in summary, with respect to the code, we're at hard work. The FX Global Code is meant to be fit for purpose, so the 3-year review makes total sense, and hopefully changing it as the market evolves. Signing the Global Code for Deutsche Bank was not that easy of a task in the beginning. Of course, we needed to review how FX applied globally to each regional nuance. But once we did that, it was easy to come together and apply these principles and look to see if we have any gaps. I can tell you now that clients already are asking us about the Global Code. And within our prime brokerage unit, it's a specific question we ask when we onboard a client. So I think as the code becomes more and more adapted and more people sign the statement of commitment, this will be a normal practice. So not actual regulation, but more of a best practice. Have you signed the code? Let me hand it over back to you.
Thank you, Russell. It's a great speech. And please, if possible, can we show the results of our poll about self-regulation or regulation? We can see that actually the majority are worse, but there are opinions that probably it's for someone authorities regulation is more preferable. So actually, the time of our panel went by, but probably we have just a few minutes for final remarks. Guy, if you would like to make some summary of probably what you heard about the Russian market as well.
Sure. I mean, in listening to both Valery and Dmitry, I mean, it does, like, you know, the code is absolutely relevant for the Russian market. I mean, Dmitry talked at some length about how that is so, and particularly now the work we're doing on anonymous trading. But you know, as I said, the important thing to note is that the FX market is a global market. Russia is an important part of that global FX market, as obviously you're all aware. And I think it is important that we have the same consistency of practice right across the whole FX landscape. And I think the FX Global Code does provide the benchmark for that consistency of practice. And hence, I really would encourage market participants, local Russian market participants, to have a look at the code and sign up to it in the same way that that the Moscow exchange has. A lot of the other market participants, including obviously Deutsche Bank, have signed the global code, and I think it would be beneficial for the Russian market to sign up. And I think it does provide a consistent and sensible way to think about the way you interface with the FX market.
Thank you, Guy.
Thank you very much for your opinion, dear distinguished panelists. Valery, would you like to say something? Yeah. Dear colleagues, thank you very much for your participation. For us, it is important not to get together from time to time, but to look at the relevance of the codes and of this particular code, global code, and the issues which would allow us to attract in Russia a bigger number of participants. As Sergei has said, being the Bank of Russia, we are on the path to sign the code, but after special internal procedures are undertaken. Now we are in the process of these procedures. Of course, the coronavirus lockdown had impact on us, since the procedures were not stopped, but they were kind of suspended. But they are in the pipeline. We're going to conclude them. Thank you very much. I urge you to sign the code.
Thank you, Russell. Thank you, Guy, for being with us today, and for next meetings. See you. Goodbye.
Yes, I hope to see you in person.
Yeah, for sure. Good luck. Thank you.